So Etan, you described this very interesting way. You came out of doing a lot of trading on the alternative trading systems, the ATSs as you call them in America, what we call the MTFs from Europe. And then you got into the whole crowdfunding world. What was it like at first when you were taking your first steps in this amazing alphabet of crowdfunding?
So we were amongst the first broker-dealers to play the role of broker-dealer for companies looking to raise capital online. That was soon after the Jobs Act in 2012, 2013. And at the time, we were focused primarily on Regulation D issuers, mostly in the real estate space. And then late 2018, when Regulation A really started to take off, only in 2019 was there over $1 billion a year collectively raised through Regulation A offerings. So it's still young. It's grown almost at 100% per year since then. But we took on our first Regulation A client in late 2018. And since that time, we've become quite active in the space. We currently have over 200 Regulation A clients, including many of the most successful Reg A's to date. We've been fortunate to be the broker-dealer on. And the benefit of Regulation A is that if you're conducting an offering where you're planning on marketing and promoting the offering, you generally will see a much better return on advertising spend if your offering is open to anyone over 18, not just accredited investors. Another benefit of Regulation A is that there's an immediate path to potential liquidity. Whereas with Regulation D and even with Regulation CF, investors have to hold their securities for a minimum of 1 year before they could trade those securities.
How important is the secondary trading aspect to crowdfunding investors?
Well, it hasn't been utilized that much yet, but what it represents is a path to potential liquidity for investors, which makes a whole lot of sense. As opposed to waiting for a liquidity event or a sale or a going public event, it gives investors the opportunity to both buy shares that they may have missed in the IPO if it's closed, as well as offer their shares for sale, hopefully at a profit, but not always. So I think where we've seen most of the secondary trading activity has not yet been in Regulation CF offerings, right? Regulation CF offerings have to wait a year to season their shares before they could make their shares available on secondary trading. I think we'll see more of that for the next year and moving forward. Where we see most of the secondary trading interest and activity is amongst our fractional share series issuers. These are companies in the collectibles space, in the fractional share real estate space, in the art space, music space. And what they're doing is they're issuing shares of specific assets, as opposed to raising capital for a traditional Reg A, where you could sell shares and raise up to $75 million a year. Fractional share series issuers are qualified to raise up to $75 million a year, but they're doing so through releasing specific assets, whether that's collectibles in the sports world, or whether that's real estate, single family homes, or racehorses or pieces of art. They generally will launch individual assets with low per share entry points, $10 a share, $50 a share. And that's where we're seeing most of the secondary market trading activity. It's amongst the collectible space and the real estate space. But I think that's going to continue to evolve. And many of our clients, especially our new clients, have a real interest in incorporating a secondary markets trading strategy into their business model at the start.
That's really interesting. Most interesting altogether when you talk about all of these aspects of the collectibles market and how that's been going. These are a new platform. Is that a tokenization approach using the blockchain, or is it simply a shared fractional ownership, the individual unit?
It could be both. And we have a number of issuers who originally will contact us with digital ambition. They'll be interested in tokenization and blockchain. The reality is you don't necessarily need that. When you're launching a Reg A, you're able to fractionalize and issue shares in physical and digital securities, and you're able to facilitate the secondary market trading of those securities without tokenizing. And with regard to the blockchain, with a regulated offering, a Reg A offering and a Reg CF offering, the transfer agent that's involved really maintains the cap table. And so you don't necessarily need a blockchain component yet to accomplish your objectives of fractionalizing, issuing, and facilitating secondary market trading of securities.